Welcome to SB Traders videos. In this video we look events of last week and its effects on the economy. This video is for information purposes and must not be taken as investment advice. Trading involves risk, and opinion expressed in this video are not to be taken as a basis for trading activity. We are neither experts in economy or trading. Two of the biggest banks, Wells Fargo and JP Morgan Chase, reported better than expected earnings this week. JP Morgan Chase's second quarter profit increased to $15.5 billion, a 67% increase over the same period the previous year. We anticipate more earning reports from the financial sector to show less than flattering results. The effect of the collapse of the regional banks earlier in the second quarter remains to be seen, and the buoyancy that remains in the financial sector, if any, remains to be revealed. The $2.6 billion that JP Morgan has set aside to cover losses resulting from predicted economic slowdown caused by a surge in interest rates and higher cost of deposits was one of the significant takeaways from the earnings report. This demonstrates financial institutions' concern of recession in coming quarters. Wells Fargo reported second quarter 2023 net income of $4.9 billion and revenue of $20.5 billion. Net interest income increased 29%, primarily due to the impact of higher interest rates and higher loan balances. Interest income continued to benefit from higher interest rates. Citigroup, on the other hand, announced less than impressive earnings, reporting a 36% reduction in net income from the prior quarter. Total revenue declined to $19.4 billion, down from $21.5 billion in the previous quarter. Net income of $2.9 billion is a 36% decrease from the second quarter of 2022. This decline was mostly due to increased expenses and higher credit costs, combined with a decrease in overall revenue. This week, U.S. CPI reports came out and it showed that inflation had come down from a year ago to the Fed's target of 2%. This was a faster decline than anticipated. However, this has not deterred the Fed from implementing a rate hike in July. Coupled with yesterday's CPI, Consumer Price Index, we saw PPI, Producers Price Index, miss its target as well, further showing signs that inflation has dropped faster than expected. On the back of the CPI and PPI news, we see USD dollar decline almost to a point of oversold territory. We expect the dollar to remain slightly weak for the next few trading days and regain some of its strength as the Fed implements its July's interest rate hike. Bank of Canada raised its interest rate again. BOC now has increased interest rate in 2 straight meetings. On Wednesday, BOE hiked the overnight interest by 25 basis points, bringing the interest to 5%. Bank of Canada Governor Tiff Macklem stated on Wednesday that inflation pressures are proving to be more persistent than expected and expect the inflation to stay around the 3% for some time before slowing down sometime in 2025. Governor Tiff Macklem stated while the interest rate hike has been able to somewhat slow down the inflation so far, the full impact of interest rate hike will not be seen until mid-2025. With the effect of higher interest rates already slowing down inflation in the U.S. with a weaker CPI and PPI report this week, we could see inflation slowing down as early as the first quarter of 2025 in Canada. BOE raised interest rates to 5% last month, raising concerns this may push the economy into a recession. However, today, Andrew Bailey, Governor of the Bank of England and Chair of the Monetary Policy Committee, said, Britain's economy is proving resilient to a surge in interest rates, and it may take time to witness the full impact of increase in interest on the economy. Many economists believe this may lead the economy into recession. Bailey in press conference today said, so far, the economy has been resilient to the impact of increase in interest rates. GBP future has seen an increase in recent days. While the immediate impact of the increase in interest rate is bullish on GBP, it is important to keep an eye on what kind of effect this may have in the next 6 months. We could see the pound sterling consolidating in the later part of the year as the impact of higher interest rates begin to affect the fundamental aspects of the economy. While an increase in interest rate is helping the British pound sterling, we could see the pound give up some of its gains as the effect of higher interest rates starts to have an effect on the various key aspects of the economy, and fear of recession causes business and consumers to be more conservative. On July 12, the Reserve Bank of New Zealand, RBNZ, held interest rates unchanged at 5.5% on Tuesday, the first since June 2021 and following the 12 straight increases. Since mid-2021, when RBNZ first began interest rate hikes, spending restrictions and inflation pressure have loosened a little in recent months. We now expect inflation to return to its anticipated range of 1 to 3% yearly. RBNZ was one of the first central banks to raise interest rates. it comes as no surprise that inflation pressure is dwindling before other economies. We may see the RBNZ maintain interest rates steady for the foreseeable future given recent indicators that the labor market situation is improving and more recent evidence that inflation pressure is easing. You are watching SB Traders videos. Today is July 12, 2023. Thank you for watching and don't forget to subscribe and like, it helps us bring more videos like this to you. Fundamental analysis of economy for Forex, future and stock market.